Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 5th of August 2021. Today I'm just going to be analyzing our major currency pairs. Going to be looking at gold and Nasdaq. And firstly, I want to look at what macroeconomic data is going to be released this week, understanding how that can impact the markets. Once we've done that, I'll be going to our charts and mapping out potential trade ideas with the technical and fundamental bias. So quickly, we're just gonna have a look at what data is coming out in America. So in US, Labor Day on Monday, so US stock markets is going to be closed. So what does that mean for the dollar, the US dollar itself? Main thing that we could identify is that there'll be a lot less volatility and less volume with the US dollar. So it's going to be a very quiet day on Monday as per the public holiday. On Tuesday we do have bill auctions. Wednesday don't really have much being released this week. We do have Fed member speaking, Fed member Williams speaking, and the Fed's Beach Book being released on Wednesday as well. On Thursday we do have initial jobless claims, so we'll see how many more people are applying for unemployment benefits in the US economy. We do have Fed member Williams speaking again on Thursday subsequently to that report. At the end of the week we do have PPI numbers being released to end the week. So moving on to Euro, we do have zoo economic sentiment. Subsequently to that, we do have employment change and GDP numbers. Thursday, the most important thing to look out for would be the ECB interest rate decision. So definitely going to see a lot of volatility towards our Euro pairs. We might see it range, on Wednesday due to no macroeconomic data being released. And investors wait on the sideline waiting to see if there's any changes or if everything is status quo in regards to the interest rate by the ECB. So with UK this week we do have construction PMI on Monday and like-for-like retail sales and Halifax house prices on Tuesday. And then to end the week on Friday we do have trade balance and GDP numbers to end the week. In Japan we do have overall household spending monthly report. On Tuesday we do have GDP numbers along with trade balance numbers being released. On Wednesday we do have money supply numbers coming out and machine tool orders, which is a monthly report in Japan. So that's what we've got coming this week. In Canada, public holiday on Monday as well. Same as the US, we do have the Bank of Canada interest rate decision, which will bring a lot of volatility to the Canadian dollar. And obviously subsequently to that on the following day we do have the Bank of Canada Governor Macklem speaking, obviously just reiterating what was discussed the monetary policy meeting and their outlook for the coming month and probably for the coming quarters. And on Friday to end of the week we do have employment numbers being released. Australia we do have interest rate decision as well, but to start the week we do have TD Securities inflation numbers being released, and then we got interest rate decision, which is because TD Securities inflation numbers always gets released prior, which helps them gauge and understand what they can discuss and what sort of forward guidance that they can provide at the interest rate decision. On Wednesday we do have RBA member DeBell speaking, and same with on Thursday. So we understand what macroeconomic data is being released. So what we can do now is understand how that can impact the markets and map out potential trade ideas with the technical and fundamental bias. So moving on with the Australian dollar, especially, so let me bring this one up. I don't think I've added it yet. Let me add Dixie. Just give me a second. Dixie, there we go. So, okay. So with the Australian dollar, after bouncing from these lows, obviously once we actually broke and retest below here, that was really just the Feds talking about tapering. And the only reason why tapering is a big issue for the US dollar is because that is going to decrease the supply, which means they're going to buy, which means the central banks are going to buy less government bonds, limits the supply of the dollar, and increases the demand overall, which means they can start to hike interest rates soon. So the tapering talks starting to fade out because employment isn't where it wants to be, or isn't where the Fed wants it to be at, because the Fed's only going to start to taper once employment has reached a certain percentage, which is, I think at the moment it's like 5.5 or 6%. So if it, I think their goal is like below 5%, which is like pre-pandemic levels. So that's ideally what they're looking at. So keeping that in mind, that is the main reason why Australia, the Aussie dollar bounced off its lows around 71 cent mark, and Dixie faded from its highs at around 90, just below 94. So just above this previous high here. So we did bounce up, but essentially the main thing I'm looking at right now is if we can break and retest below 90. Essentially, if we can stay below 9200. Where we did get a bit of a aggressive bounce back, we can see continuation sells, ideally targeting 91,850 and then targeting the previous key level. But once you break and retest below, let's say 91,700, you will mirror this previous move that was to the upside. So I'm very bearish on the dollar at the moment due to the current macroeconomic conditions and the forecast by central bank members. So yeah, we just have to keep that in mind. So after bouncing off these lows, we actually did break above. We did truly break above this range because NFP and US unemployment rate was neutral, actually below consensus, and we could really tell that by the jobless claims data that got released on Wednesday, along with ADP employment numbers too, which was well below forecasts. Anticipating for weak employment from the previous month. So that's enough talking about employment, economics and so forth. So let's just talk about price. Alright, so when I'm talking about price here on the Australian dollar, I'm really liking how we actually did push to the upside here. I'm really liking that, but what I'm really anticipating is if we can actually stay above this previous range, right? If we can stay above this previous range, yeah, so if we can stay above this previous range, I'm really liking if we can retest this previous order block high on the higher time frame. So retest here, retest these previous highs and these previous lows here, start to potentially play back in this little range here. Okay, so if we can play back in this little range here, very medium risk buys, I would say, at these lows here. Once we do get a bit of a pullback on the weekly candle, we could mess around in this range here, so medium risk buys here, and then we could potentially continue back to the upside. So that's what I'm looking at. That's probably my major move for the Australian dollar. The only way you're gonna see this happen if we get positive inflation numbers from TD Securities on Monday. So that's early. So that's Asia session on Monday. That data has been released. So if we get positive data from that and more hawkish forecasters by the central bank, we can more than likely see Australian dollar start to appreciate and start to break above these previous order block high here. So that's what I'm looking at with the Australian dollar. However, in the short term, if we do see a bit of fear in the economy, we do see central bank members be a lot more dovish in the forecast, emphasizing a bit of a risk off sentiment. If we break and retest below here, I'm really liking sells only back to this previous range here, right? I'm only going to target sells here, okay? But I'm not really too inclined on taking sellers. I'm more inclined on taking buys, just with this strong move to the upside, and knowing there isn't really any fundamental catalyst to see the Australian dollar decimate, essentially. So with that in mind, that's what I'm looking at with the Aussie. So moving on, Euro is actually very similar. After bouncing off these lows, I'm really liking if we can actually stay above 118.850 roughly. So if we can stay above there, I'm really liking for some continuation buys, knowing that the ECB will be a lot more hawkish with the interest rate decision being released later this week. What else did we have being released? And we did have GDP and employment change numbers coming out as well. So just keeping in mind that that will make me very hawkish on the euro. So this is a make or break level at the moment. So let me get rid of these levels. So what I'm liking is if we can. So what I'm liking is if we can stay above here, that would recognize that, like, that would show me a lot more buy side liquidity. So if we can break above here and stay above here, I'm really liking if we just retest, identify that there's a lot of buy side momentum with anticipation of a hawkish sentiment from the central bank and good employment numbers. So that being said, yeah, I'm really liking for some buys here at around that's probably around 118.850 for some continuation buys up. Really liking is if we can retest just above this level here. Yeah, just above this level here and above these previous wicks here. That will show me a lot more buy side momentum and a lot of buy side liquidity with the euro. So yeah, that's what I'm liking at the moment. However, if we do fail to come above here, I'm really liking if we can get some counterbody closures below 118.800 for some sells down, and possibly playing to the previous liquidity level, which I'll draw out here. So yeah, probably targeting here, and then to see how we react. And then if we were to continue back down, I'd want to see if we can retest here and possibly come down to these previous lows, right? Possibly come down to these previous lows. But I'm not too inclined, because to me, obviously we do have Delta variants, which is slowing the expansion for our major economy. So that's something that's really slowing us down, or any fundamental catalysts pushing the euro down and slowing the recovery with the European economy. Like, that's the only fundamental catalyst that I see at this point in time. We can definitely see restrictions are starting to ease slowly. So my bias, and the US is not in a state of mind, or hasn't met its monetary policy objectives to start tapering anytime soon. So with that being said, I'm still emphasizing a strong risk on sentiment for continued buys on euro. So I'm looking at on euro. Sterling dollar is like very similar. Yeah, so sterling dollar is like very similar. We actually do get roughly very close to a double bottom here. Once we actually dip down close to those July lows, fails to stay below 136 flat, and after bouncing from those lows, we have steadily continued back to the upside, right? So yeah, so we have steadily climbed to the upside, right? So what I'm really liking is if we can, I probably want to stay above this level here. So that would show me a bit of buy side liquidity and a lot of buy side momentum So just to explain it, is if we can break and retest above these previous highs here and these previous lows here, I'm really liking if we can come back up here, retest this little liquidity zone and push back up to potential this next level. Okay, so we can definitely see a high time frame order block being formed here, and then targeting these previous highs would be my next price target. So what I'm really liking is if we can retest here and don't see any high time frame candle body closures below 138.800, really liking some continuation buys coming further to the upside, retest, come further here, then retest, then come back up. But I know that is not going to happen in a week where it's going to fly up. I know it's not going to happen. The only way you're really ever going to see that happen is if we actually get some weaker jobless claims data in the US, signaling the US economy is a lot further than it needs to be in regards to employment. So that's my main bias with sterling dollar. So really liking the continuation buys. I don't really see sterling dollar mirroring this flush move to the downside. So yeah, just got to keep that in mind. And also keeping in mind on Monday, like I said, there's not going to be much volume volatility with the US dollar, so we will see sterling dollar, euro dollar, Aussie dollar range for the session, along with the USDCAD. So, well, USDCAD, both of those countries have public holidays, so just got to keep that in mind. GJ, very similar bias, essentially looking for the same thing. So you can see here, can definitely identify this liquidity level, and obviously the strong bullish push to the upside. Really like how we didn't get some strong rejections here. We actually did initially on the rally up. That's all said and done, but then we actually finally did get a retest earlier last week, and we did actually push further to the upside. So the next level I'd be looking at for right now probably be this level. Like I said, I'd really like to see like a retest here. I don't think we're going to pull back that far. I really don't think we're going to pull back 60 or so pips. And if you really want to see a short-term trade, you can definitely see a bit of indecision in the past 2 days here, right? So yeah, what I'm really liking is if you're really risky, take those break and retest sells here, but just keep in mind what the actual trend is. Okay, we're in a strong bullish trend, so if you want to take the break and retest, the nice candle closure below here, take that sell and take it to the next price level. Well, what I see as a price level, which is roughly about 151,550. I mean, you can take that high risk entry, completely up to you. I'll be really safe when you get the candle closures below, target that. But you just gotta remember, this can take maybe like a whole day to happen, and then you have London session happen, and then you come back up to your entry and you start to break and retest above here, and then this could just be a massive wick to the downside, right? Like something like this, right? It could potentially just be something like that, right? So yeah, like we can definitely see a little high time frame order block being formed here, which is roughly 152. Yeah, so it's roughly about 20 or so pips. So once you break and retest above here, very safe for some continued buys to the next price target, which is 152,600. So I'm really liking if you get some candle closures above here, which is, to me, that is a very nice range. Yeah, so that's roughly. So that's roughly about 40 or so pips, so that is a good trade to take the buys up. And I'm giving you the bias or my forecast if we do break and retest and continue back down and generate see price get pushed to a more favorable demand zone. Okay, so next one I'm going to look at is USDCAD. I did mention USDCAD on Thursday after we did get those employment numbers come out. I said once we actually stay below here, that is very good continuation sells, and we actually did retest a high time frame key level as well. So I mean, feel free to look in the Telegram chat and see what my bias was and what I was anticipating and talking about. It's there. So once we actually did break and retest, especially once we broke and retest the historical key level at around 125.540, we did push further to the downside. So yeah, just got to keep that in mind with USDCAD. DXY, I won't talk about DXY too much. Like I said earlier, this video, once you break and retest below 92.100, you really want to see price come down to 91.850, and then this 91.670, just where we generated that high time frame support, and we just played around this little range. Once you break and retest here, I guarantee, like, there will be a lot of sell side liquidity just because of how this thing just rallied up, right? Because to me, when it comes to trading financial markets, like, whatever goes up, like, will come down. Okay, like, will come eventually. It will come down. It's especially especially currencies, and foreign exchange, right? Because we're not dealing with a stock, right? Because the stock can go from $1 to like 100 or $1,000, whatever. Currencies are pegged by they're pegged, but you're trading a currency against another one. The only way it's just going to continuously grow is if this economy is flourishing, like it's utopia, and then this other currency has been ridden by war and it's just completely decimated. Like, that's the only way you're gonna see a currency completely just like rally. But the thing is, that will never ever happen very quickly, just because the amount of money that is traded daily, the amount of volume that's traded daily on the foreign exchange market. Anyway, so that's a different topic completely. So moving on. So what you really want to see here is when you come down to this previous price level here, right? So we can definitely see a bit of a high time frame order block being formed here. The lows around, so the lows are at around 850, and we've got the highs about 150 or so. But here's the thing, right? Once you break and retest here, once you come down here, right? Come down here, then you break and retest. But then when you come down here, you're not just gonna you're not just gonna go straight down, right? The only way this is gonna happen, I guarantee you, we will be playing in this range prior to a very important macroeconomic data. And to me, the only important macroeconomic data that's going to be released soon is inflation numbers. It's not being released this week. I believe it's being released the following week. So you may see USD start to sell off. There's a good chance. There's a very good chance, unless we just get some aggressive bounces of these lows here, right? So that's my bias when it comes to the dollar, because there is a good chance that we will mirror this initial upside move, okay? And you see this happen all the time, right? When I'm talking about mirroring moves, so we got this downside move here. We essentially replicated this downside move, okay? It's like here we get this rally up to these yearly highs, then we just mirror it, okay? It's just repetition, okay? It's just repetition. So keeping in mind that. Gold, I haven't analyzed gold in a while. I'll be honest. I'll be very honest. So after this mini flash crash we had, bouncing from the 1688 lows, we have been settling, chugging back up. What you really want to look out for is once you break and retest above here, right? So that's a very key level right now, because we could potentially once you break and retest here, like above here, that is you're going to see a lot of buy side momentum once you finally break above that, and it looks like we're starting to do that now. But however, if you do see some exhaustion, see some fails to break above, I believe it's like 1833, we can. So yeah, once you break above, we can definitely see a lot of buy side liquidity being formed. So that's our make or break level. But there is a possibility that we may see a bit of exhaustion and fail to break above. But the only way that's going to happen is if US dollar bounces off those lows. Okay, like I'll show you, right? So we got dollar potentially bouncing off this little strong liquidity level, and then isn't it a coincidence that dollar is at these liquidity levels as well, like these lows, and gold is at these highs? Like, doesn't that make it, when you look at these like side by side, isn't it a coincidence? Like, why at this certain time is gold at this price, at these highs, and possibly to break above these highs, and why is dollar at these lows, and with the possibility of breaking these lows? Okay, so one thing's gonna happen. One thing's gonna happen. We're gonna break below these lows, these like high time frame lows, or we're gonna start to get some strong rejections and see gold fail to stay above 1833. So just saying, and this stuff happens day in, day out, week in, week out. That's why it's always good just to look at the high time frame and making sure you're not always selling resistance or buying a support. So yeah, just keep that in mind. Nasdaq is the biggest greed train to man, in my opinion. Obviously bouncing from these lows, tapering talks. Like essentially Nasdaq, Dow Jones, S&P is the inverse of the dollar. It is. So that being said, so with Nasdaq right now, well, let me go on the 4 hour. Sorry. Yeah, so with Nasdaq right now, so if I'm trying to trade Nasdaq, if I'm trying to be real safe, really liking if we can stay above here. These are some medium risk buys, and these are your safer buys, right? They're your safer buys. Once you break and retest above there, break and retest below here, we will potentially push further to the downside and mirror this initial move to the upside. But I wouldn't be selling Nasdaq for too long, just because of how bullish it is. We've got to keep in mind the only reason why Nasdaq is so bullish, why Dow Jones, why any stock market is so bullish across all the major economies, is due to central banks. Okay, because the central banks, when they buy government bonds, all that money, not all of it, a majority of that money is just going straight into the 1%, so they can buy up, right? They're not giving it back to the people. They're not giving it back to the 90%. They're not doing that, man. They're just riding this greed train until it's time to hike interest rates. And we've got to realize, like, tech companies, like the revenue they make is actually phenomenal. It's a current, it's a current world we live in. Like, our world is derived by technology. It is what it is. And tech companies make so much money. But the thing is, when it comes to revenue, and the central banks start to taper, decrease liquidity of the market, that means less money is being pulled into the stock market. What does that mean? That means you're going to see a minor correction. So you're not going to see it sell off. The only way you're ever going to see it sell off is if you see another recession. You're just going to see a correction, like a 10% correction, if that. But it's already going to be priced in. So you're just going to keep that in mind, because when they hike interest rates, those businesses, they lose revenue because they got to pay more when they make their loan repayments. Okay, because all tech companies, all businesses, they have to borrow money from the banks, right? And when the central bank starts to taper, decrease of liquidity, that is a sign the economy is flourishing, and that encourages a contractionary period within the economy. Okay, so just got to keep that in mind, and that's why we did see NAS continue to rally back up. Did have a bit of a liquidity grab, see price get pushed to a more favorable demand zone, and we did push back up because employment numbers were bad. Like I said at the start of the video, and I've been saying on all my past videos, that if we do, if employment isn't where it needs to be, they won't start to taper anytime soon. That means more money goes into the stock market. Okay, so it's my analysis for the week. If you enjoyed the video, please like, share, and subscribe. And thanks for watching the video, guys.